Afternoon, everyone. Thanks, Toby, for inviting me along, and thanks to ASX and AWI Ventures for putting this on. Now, today, I'm going to do something a little different. I want to talk less about me and more about you. I want you to start by thinking about all your goals in life. Think about the reasons that you invest. Now, all of those good things I'm sure you're imagining at the moment, your family, security, a holiday home, a new car, are much, much closer than you think. There's never been a time, never, in human history, to be a self-directed investor that's better than 2014. And I want to give you 6 reasons why. Firstly, tools. You've heard a bunch of really interesting presentations this morning. You'll hear a bunch more this afternoon. These businesses are allowing you to invest in ways that weren't possible 3 months ago, let alone 5 years ago. They're allowing the everyday investor to invest in products and services that were not available to them. And better yet, these tools are available at radically lower prices. Just think about broking, for example. Think about how expensive and difficult it was to buy a share in a company in 1950, if you can remember back that far, or even 1995. It doesn't cost $150 to make a trade anymore, it costs $10. In fact, there's brokers in the US offering free trading. And this has been coupled with vast access to information. With a few keystrokes now, we can pull up entire corporate histories of any business you can imagine, stuff that would have taken weeks of research in the recent past. Now, these first 3 things are all new phenomena, but you've always had a couple of advantages being a self-directed investor. And it starts with you. You know more than you think you do. You're a customer of many, many businesses. You've probably worked in one for decades. You might own your own business. Without even knowing it, you probably have vast and deep industry knowledge, compared even to maybe the CEOs of some of these businesses we look at. Use that to your advantage. Alignment. Financial services is plagued with conflicts. When you invest for yourself, you're perfectly aligned with your goals. You don't have a career to protect, you don't have a boss to cozy up to. You can do what's right for you, and you can match strategies with what makes sense. And this frees you up to be genuinely long-term, rather than thinking in seconds, in days, in weeks. You can think in terms of months, years, decades. The time horizon you probably think about when you're thinking about investing. So that's 6 reasons why it's a great time to be a self-directed investor. There's heaps of tools available. I'm sure tomorrow there'll be 10 more. They're available at very, very attractive prices, and you can access information in ways that you just couldn't before. You know more than you think you do. You're perfectly aligned with yourself, which allows you to be long-term. So that's the why, but what about the how? How do you be a better investor? Nobody wants to be average. No one wants to be that 75% of people who underperform. So I'm going to give you a few quick tips on how I think most people can be a better investor, and they're disarmingly simple. Focus on the business, be contrarian, be a student of history, and know thyself. I'll briefly expand on each of them. When you invest in a business or invest in a fund, you're not buying a number on a screen, you're buying part of a real business. This might seem obvious, but it's not where most people start. They're worried about price gyrations, whether my stock's up or down 1 or 2% in a day. And we know businesses aren't built over days, they're built over years. And you have to think about, well, these things that I own, this little part of a business that's now mine, how are they going to grow in the future? What do their prospective markets look like? What are they doing to fight off their competitors? Take this simple step and you'll be ahead of 90% of investors who spend all their time focused on price and not much time focused on what they actually own. Be contrarian. Now I know this sucks, but markets aren't your friend. Markets are mostly efficient and you don't get rewarded by being popular. Markets only reward those who take a different view. Warren Buffett's probably the most overquoted person in finance. He's absolutely right when he says you have to be fearful when others are greedy and greedy when others are fearful. It gets at the heart of something that people find so tough to do. It doesn't make sense when you want to make friends down the pub, but if you want to make money, you have to do something different. So be contrarian. Know your history. With 24-hour news cycles, we focus on what's recent, what's happened today, what's happened last week. We all know our investment horizons are much longer than that. We know we often mistake stuff we're not familiar with stuff that's very, very unlikely. We focus on what's local rather than what's global. Think about what happened during the GFC. Even if you had a rudimentary understanding of financial history, you'd know that collapses happen every decade, if not more frequently. Since the Industrial Revolution, think about how many financial market collapses we've had. It's a mistake we often make. We look at what's happened in the recent past and we think that'll keep happening in the future. And we also just look at what's happening in our own backyard and don't think about what's happening overseas. Know your history. And more importantly, know yourself. Look at the person that you're sitting next to. They're not your biggest enemy when it comes to making decent investment returns. You are. We're prone to panic, we're prone to overconfidence. People who outperform are honest with themselves. They know their weaknesses and they know their strengths and they try and work on them. Know yourself. And the best bet in this journey is you're not alone. We've been helping self-directed investors since 1998. We're a fiercely independent research and advice business. We love taking complex financial stuff and making it understandable for the everyday investor. We have 3 businesses. Intelligent Investor Share Advisor, which is ASX stock picks. We find interesting businesses for you to invest in, and then we help you build a portfolio around them and allow you to ask questions about any stock we recommend. We've done all right. We've returned about 15% per year over 15 odd years. We have intelligentinvestor.com.au. This is our free insights website. You can go on there and find daily free market commentary and educational material if you're just starting out. And we have Intelligent Investor Super Advisor, which is advice for your broader portfolio. It's the asset allocation piece, it's the fund reviews, it's the ETF reviews, it's the tax questions and Q&As you might have. All those products are available to try for free and I encourage you to do so. Now I want you to cast your mind's eye back to those goals you had just a few minutes ago. They're much, much closer than you think, and I hope we can be part of helping you realise them. Thank you.